Hey guys, Bix Weir, roadtoroad.com with your Friday road trip for December 20th. Let's talk repos again. The reason I harp on repos is it is a huge sign that the banks are in deep trouble. What they're trying to do is do a QE without declaring it, getting bailouts without declaring it. So they're having to do, what would you call it, quantitative gymnastics and contortionist moves to bail out the banks without telling the world they're bailing out the banks. And I'm trying to my best to keep track of what's going on, at least the big things. And that's what I post every day, just about every day at the on the private road, in the private road area. Go to the private road and then go down to right down here, Fed repos, and this is what I posted today. You click on that, it'll show you the repos. I take a screenshot of my spreadsheet down at the bottom. Now let me explain what's going on here. I believe they're going to hit 600 billion by January 1st. That nighttime repo, basically to cook the books on December 31st. So it looks like they're a lot healthier than they are. They also might change some rules. I think at some point they're going to increase these repos that they've already said. But let me show you how it has kind of changed over the last week or so to get even more sneaky bailout stuff. So on my sheet, I have one, two, three, really three categories of Fed purchases or loans that I calculate. One is the outright purchases of U.S. Treasuries or mortgage-backed securities. That's just a regular QE type of bailout where the Fed buys these treasuries from a bank. Usually the treasuries have some problem with them that they're not saying, probably two owners, stuff like that, so the Fed can hide it. Now the other two are the overnight repos, which is a 24-hour loan, and then term repos, which is the same type of thing, except they state a specific term, usually 2 weeks to 3 weeks. Now all these term repos are going past January 1st so that they can cook the books. It's all about January 1st right now because that's their reporting date. All right. Now, here's an interesting thing. U.S. Treasuries, the way they announced it, they'd say they do 7.5 and 1.5 or up to 2.5. And they were doing that for a long time. October, November. Here's November 1st. They're going 7.5, 1.4, 7.5, 2.2. 1.6, 3. Everything's kind of below that. Then back to 7.5, 1.6. Just back and forth. And a couple times they threw in a bigger number. Now these are permanent, so they are all getting cumulative added up as if, like the TARP fund was $700 billion. This would be added as part of that. Look what's going on lately. They did 7.5 to 2. A large one, small one, large one, small one. But look what happened on 12/16. 12/16 was the day the corporate taxes were due. They didn't do a big one, but they had a huge repo term right there, 56.3. And of course, it expires. That's a term repo. It expires after January, on January 17th. And they had the normal 1.6. But look what has happened the 17th, 18th, 19th, and 20th. 9.3, 9.3, 9.1, 7.5. They are desperately doing the larger permanent bailouts. And I calculated the total right now that they've done in permanent bailouts, almost $200 billion. And that's permanent bailout that they haven't told anybody about. And the current outstanding term repos is $168 billion. But you got to count the overnights as well. Right now, we're sitting at $452.7 billion is needed just for tonight for the bailout. If the Fed came to Congress and said, we need $450 billion to bail out the banks like they did in 2008, the Congress would have said no. But this way of doing it, they try to keep everything on under $100 billion. Here's some overnights that are $100 billion. Remember, the overnights don't really matter all that much because they're getting paid back the next day and they're just being rolled over. near the end of the year, we're going to see all these numbers spike, especially the POMOs right here, the U.S. Treasury purchases, as we're seeing. This is almost $10 billion every single day. And how many days until Christmas, till New Year's? I think there's 1, 2, 3, 4, 6 working days. 6 days that the markets are open. These are only done when the markets are open. So I think we're going to look at least 200 billion more in the next 6 days. It is crazy. It is absolutely crazy. But I expect these full purchases to go higher. Right now, and here's the other thing. When I go to the Fed website, here's the page that they do this on. They've been doing 2 a day, not just a full one at 9. They've been doing 2 a day. It used to be 1 every other day, a large one, a small one. Now they're doing 2 a day, 1 large one and 1 small one. And they haven't made any announcements about this. So today, 7.5 billion is the number. And if you go down, that's yesterday's. So yesterday's was 7.5 also. But look at this. You go down, that's the 19th. Here's another one on the 19th for 1.6. It's all about the time. From 10:30 to 11 was that one, the small one. And then everybody walks away, and then all of a sudden, from 1:29 to 2 p.m., they needed another 7.5 billion. Basically, during the day, they have to do these things. Now, these are flat out purchases. These are not being rolled over. This is basically buying toxic assets off the banks. So today, I've got it at 7.5. I'll bet you by the end of the day, we're going to see another 1.5 or 2.5 billion on a small one. That's just the way they've been doing it. So I'll keep an eye on that, and I'll adjust this chart as need be. Because look at the last 4 days is 9.3, 9.3, 9.1, 7.5, but it's only 1. Each one of these was 2. So I do expect us to get another 1.5 to get us to 9. Let me guess right now, 1.8. 1.8. Let's just say 1.8, which gets us to 9.3 billion, which is up here at these highs. But look at this number. This is the total. We're at 452.7 because all these U.S. Treasury purchases add up and stay on this total. This is the actual amount that is being bailed out tonight that has not been paid back. You know, some are very short term, like 39.7 billion is just for tonight. But as you can see, those are all being rolled over. And longer terms on these. Look at the expiration dates. So on Monday, which is the 23rd, let's see if we have any expiration dates. It would be 12/23. Yes, there's a $28.5 billion term. It's going to expire, so I'm going to minus 28.5. And then I guarantee you they're going to add more than 28.5 right here. Probably 35 is my guess, which will also increase that number. And it'll be after the 12/31 maturity for the term maturity. So they are building and building. I do believe we'll get well over 500 billion, probably between 6 and 7. If they hit 700 billion is the number that was bailed out for the banks in 2008. That was the starting number. There's been forensic analysis on that. The ultimate over 2 years, the Fed bailouts were $28 trillion. And it only lasted 10 years. That's the amazing thing. For $28 trillion, the banks stayed afloat for 10 years, gave themselves bonuses up the yin-yang, everything's fine. Bullshit. All these bankers are getting full bonuses this year too. And yet, had the Fed not given the banks any repos, they would all be insolvent. But everybody would. So that's what's going on. Here's an example of what's going on today. So when I first looked at this morning, it's 8:30 a.m. Eastern time, this is the overnight repo, 26.7. Nothing really startling. That's kind of average of where it's been. This got added. Now, this was added at 8:30 a.m. This is added at 1:15 p.m. I went back and made sure I didn't miss any. I don't think I've missed any. 13 billion on a reverse repo. What does a reverse repo do? It brings the interest rates down. Also required. You need high bailout money and low interest rates. So that's how they're keeping the interest rates down. Like I said, financial gymnastics to keep this thing going. It is insane. Anyway, I'll keep you informed these next 6 days of, let's see, 1, 2, 3, 4, 5, 6. Yeah, 6 days of market action is 6 days, especially the last 2 days. Probably next week. It's a very liquid market too, because everybody goes home for the holidays. It's going to be really interesting what happens, especially in silver, because within 6 days, the COMEX December contract expires. So keep an eye on that also. It's crazy. The amount of manipulation needed to keep the system together is off the charts. Anyway, this is Bix, Road to Ruta. Talk to you guys later.